Hello and welcome to Mint. Today we confront a trillion shilling question affecting every Kenyan. Our nation's public debt has amounted to 11.36 trillion shillings, with a significant portion borrowed from us. Yes, Kenyan citizens through treasury bills and treasury bonds. But you may ask, what exactly are treasury bills and treasury bonds? And more importantly, since these are government's primary means of borrowing from its people, should you invest in them? Are they a haven for your money, and how do they work in a way that benefits your financial future? We are breaking down these powerful investment tools to help you make informed decisions. Stay with us. Your next smart move could start today on Mint. Also, today on Mint, buy now, pay later. Why is this payment concept exploding across Kenya? The photo that saved a business. How one picture helped a 17-year-old catering business from the verge of collapse. From spice to success. Meet the culinary artist who turned a love for flavor into a thriving business.
Earn it, spend it, save, invest. Earn it, spend it, save, invest. Mola, kila siku nikucheza mola, make more bila stress. Mola, kila siku sikuweza mola, make more bila stress.
Just as you might take out a loan for a new business or to pay school fees, the government also needs to raise funds for roads, hospitals, or our collective future. Instead of going to a bank, it comes to us, the citizens. How? By selling what are essentially government IOUs, which are treasury bills and treasury bonds. This week on Money Moves, we demystify these powerful investment vehicles. What's the difference between a bill and a bond? What are the returns? We provide you with all the information you need to determine if lending to the government is the right or wise investment for you.
Earn it, spend it, save, invest.
The Kenyan government spends more than it earns, meaning that revenues collected through taxes and other means can only go so far to cover the expenses. The government then has to borrow locally and internationally to cover the gap. As part of its domestic borrowing, the government sells treasury bonds and treasury bills to banks, pension funds, and insurance companies. It also sells them to the general public. Kenya's total public debt is approximately 11.36 trillion Kenya shillings, with a portion of that debt held in the form of treasury bills and treasury bonds issued to Kenyans who lend to the government. So, here's the trillion shilling question. Should you invest in treasury bills and treasury bonds? But before we get ahead of ourselves, what are treasury bills and treasury bonds?
For treasury bills, they issue in tenors of 3 months, 6 months, and 1 year. So that's where the cash element comes in, because it's short term. Anything that with a short-term investment horizon is deemed as cash or near cash, whereas anything above 1 year is now where the different assets comes in. Treasury bonds is like you're bonded for the period of your investment. So for instance, if you buy a 2-year treasury bond, it means that for the next 2 years, you've given Government of Kenya your money, whatever it is. Minimum investment is 50,000. And then it's a bond with the Government of Kenya. So the commitment by the Government of Kenya is every 6 months, they will be paying you back what you call a coupon payment up until the end of the 2 years, and then you get back your investment.
Deciding between the two investment options will depend on several factors. First, your investment horizon, which refers to the length of time you intend to hold an investment before requiring it. This implies treasury bills for the short-term horizon and treasury bonds for the long-term horizon. 2. Tax breaks.
What you have seen being favorite is now what you call infrastructure bonds. This is a segment of treasury bonds. On the coupon that you receive from the government, there is no withholding tax that the government withholds. So that has really attracted the masses, be it retail investors, be it local institutions, because of that tax-free element.
The third factor is the coupon rate, also referred to as the interest rate. Due to their long-term nature, treasury bonds have a higher coupon rate compared to treasury bills. The fourth factor is liquidity. Both T-bills and T-bonds have high liquidity. However, T-bills offer lower yields and do not provide periodic interest payments. Whether T-bills and T-bonds interest rates are favorable depends on an investor's financial goals, risk tolerance, and broader economic context. However, interest rates are influenced by demand and supply, the microeconomic environment, and the central bank rate, which acts as the benchmark for all lending rates.
So for instance, most investors, as they participate in the auctions, be it treasury bills and treasury bonds, the kind of return that they will want is the return at least will ensure that they are compensated adequately for future inflation risk that might crop up. If you look at where inflation was a year ago in January, it was around 9%. So from investors' perspective, they were also sort of pricing in that inflation will remain 9%, and a result of that, they will want now to be adequately compensated by that higher inflation. But we've seen gradually that central bank rate has been reduced. Right now is at 10%. Because of the benchmark rate trending lower, that has also affected expectations by even the market participants as they go to demand the extra yield from the government.
Given that the government is constantly in debt, how secure are your investments in T-bills and T-bonds?
That's the good thing, that we are perpetually in debt. And it's not a peculiar situation in Kenya, just to put it out there. There's just a few countries run what you call a balanced budget, whereby their revenues that they get from taxes and non-tax revenue is able now to fully finance the spending plan. If you look at the SGR project, yes, we borrowed in dollars, but the revenues from SGR is in Kenya shillings. So the thing is, how do we service this currency mismatch? How do we increase our exports to be strong enough, to be high enough to be able to service this debt without creating some pressure? So those are the mechanisms that the government needs to ensure are in place to reduce the debt vulnerabilities.
As the government continues to borrow, institutions and private citizens will continue to invest. With a minimum investment of 50,000 Kenya shillings, you can transform that perpetual debt into your personal wealth.
Earn it, spend it, save, invest.
From traditional investments to modern credit, retail purchases have evolved. In recent years, buy now, pay later has exploded across the country. The market is booming, with projections showing it will reach 152 billion Kenya shillings this year alone. But why are Kenyans so eager to jump on the BNPL bandwagon? Is it just convenience, or is there more to the story? We'll explore the factors driving this massive growth and help you understand the pros and cons of these popular spending concepts.
Some Kenyans live for promotions while others save for months to acquire that luxurious item. The one thing in common for all these consumers is the lack of the total fixed amount to purchase the item. Bearing this in mind, Buy Now, Pay Later or BNPL is now the new kid in town, allowing people to get once-in-a-lifetime deals.
BNPL is how do I call it? I'll start by saying it's a problem solver. It's one of the things that we needed as a country and as Africa and all. So if you want to understand the context of how the economies work in Africa. So we have a lot of people that are unbanked. So there is no way for them to get like structured loans for things that they need. We have an economy whereby people are living hand to mouth on a day-by-day basis. The amount of money that they make that day is what they need to spend within that day. So this is a method of flexible payment whereby any person can get an asset or something that they need, can get it upfront and make the payments later.
Though not a totally new concept, Buy Now, Pay Later can be seen as an improved form of hire purchase, allowing faster access to items.
So if you look at a lot of history, let's say in developed nations, they had something that is called a layaway, where, for example, if you wanted to buy a TV, you'll go into a supermarket and then pay some money for the TV, they'll set it aside for you, and then you keep paying but not using the TV, and then later when you finish paying, that's when you start using the TV. Coming back close to Kenya, we had something like Kenya Credit Associations, whereby I see my parents and other parents were actually getting TVs and home theaters through this method. So if you look at what we have, the traditional type of hire purchase and etc, like it was a bit, so one, time consuming, like the amount of time you need. So there's a lot of paperwork, bureaucracy.
Being able to get items fast can be like a drug. Buy now, pay later providers are keen to ensure responsible lending.
We're very key on responsible lending. So we need to ensure that you don't have other loans that you're struggling with, so that it's easier for you to repay this loan. We'll understand which specific stage you're operating, so that we know if you're comfortable to make the daily payment. So literally, we've gotten a lot of people that are not technologically savvy. The technology is used behind the scenes, like in terms of credit rating, in terms of processes to make everything easier. But for the people that are using it, we just want to empower them so that they start even using that technology.
With the ease of access, the know your customer aspect is key in buy now, pay later.
It's a very risky business, and it's a business where companies that do not have the same values as we have will not venture into such type of business. We're looking at a business whereby we have people that do not have access to these products from the traditional methods that exist. So from our point of view, our customers are always good people. So from the start, we have a lot of good customers, and most of them are repeat customers. So there is always that risk, but it goes back to the KYC that we do. So we do proper KYC to not limit per se, because we are not giving out money. But in terms of responsible lending, one of the things that we actually do is we do not allow a customer to have more than one loan during their life cycle. So for example, if you have a border loan, you can only have that loan, and you cannot have two border loans.
Overall, buy now, pay later is a product for everyone, but mostly people without access to credit.
If you are well paid, you have access to capital, access to the existing traditional lending methods, then BNPL is not for you, because it's easy for you to get what you need. But to the target audience that we have, which is a majority of Kenyans, this is a lifesaver. People that do not have access to traditional credit systems, people that do not have bank accounts, people that cannot afford to pay things upfront, have an opportunity to actually get benefits from things that will help them.
While its convenience is undeniable and the market continues to grow at an incredible pace, it's also good to read and understand the fine print of buy now, pay later. Let's take a short break. Discover how a single stunning photograph pulled a 17-year-old catering business back from the edge of collapse.
Earn it, spend it,